Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having an amazing day. We're going to take a quick look at Bitcoin, kind of see what's going on here, of course, after yesterday's unique behavior. We'll see kind of what the summarization of that was. So first and foremost, we'll just go ahead and take a look at some of the obvious indicators and work our way down. Also, if you're new to the channel, not a financial advisor, I just love teaching people how to trade, and I hope that you can learn a thing or two here today. If you want to become a better trader, consider joining my community. I have a link in the description below for that. I would recommend first of the month, of course, just based on the fact that we should have our trading academy rolled out for members there, and make sure you get a better overall experience. But the website is still under development. I greatly appreciate your patience. Thank you so much. We'll have that rolled out here soon. Now, for Bitcoin, let's go ahead and address some of the obvious key indicators here, okay? So first and foremost, we can see the MACD kind of trying to converge. I wouldn't worry too much about that for the moment on the one-day chart, because honestly, that's not super relevant considering the momentum that we've had was kind of stunted out yesterday with the result of, the meeting, right? So if you didn't catch that, it was pretty much just neutral, right, at best. Not a lot of optimism, I guess you could say, and that I think that kind of caused the price action to retrace. Now, it didn't decrease significantly, but it was jumping up and jumping down quite a lot in a short amount of time. So we'll identify that in shorter time frames here, but the macro right now is still not great, if you will, based on the simple fact that we do have this stunted out situation right around 37,000. So the price action cannot pass 37,000. It's kind of a bummer. But at this point on the one-day chart, you can see there's a shelf right here where the price is having trouble getting past that. Now, when it's done this in the past before, we've seen the price continue to retrace afterwards, right? Now, not to say there's a guarantee in doing so because the fact that we have, a shelf right now, because often the more often you test a resistance level, the more likely it is to break too. We got to realize that too. But the bottom line here is that we are still in a downward trend, so to speak. So the likelihood, I think, of it coming down at least one more time before, well, I wouldn't say before month end, but before we see a significant correction and to get the price back up, that I think that'll probably happen. And the reason why is because we need to build a foundation, right, of volume to be able to build on. Now, we are building some volume here, right? If we were to zoom in a little bit, we can kind of see that we got a decent amount of volume, right between 36 and 37,000. It's right at that base there. So that's a good sign, right? It's ultimately good. But on the big picture, we've got some other things kind of holding us down, right? We got the moving averages, of course. We've got this descending wedge type of pattern. So even if it were to break 37,000 and to kind of close above, that wouldn't mean that we're still bullish, right? We're back on track. We've got to break out of this trend line, but also more importantly, try to break above 40,000, right in that range there. I think that's a key level resistance that we need to get through. Right now, I'll take a higher high and a higher low, but for the moment, we are not there yet, right? Okay, so I guess what I'm saying here is just in summary, we haven't broken any specific barriers per se, and just being, with a one-day candlestick closing 3 days, almost 4 days in a row, under 37,000, that doesn't bode extremely well. All right, every time we've had that in the past, the price has inevitably dropped its bottom and came back down further. All right, so pending all news aside, for the most part, I would say that the price is essentially not. I mean, we're not seeing a lot of strength from Bitcoin right now. Okay. It's just kind of what I see. All right, so moving on to the 4-hour, let's go ahead and take a quick look at this here. And you know what? I forgot to look at the RSI on the 1 day. We're still stuck under 30. Okay. Now I think I mentioned this yesterday. The 1 day candlestick hadn't closed yet. So we want to wait because it was peaking up above. If you recall correctly, the RSI was above 30. It was like 35 or 40, somewhere in that range, trying to get closer to 50, which tentatively seemed like a good thing. But until that candlestick closes and gives us that certainty that it's officially on the right track, then we can't consider that the case. And what I'm getting at here is a simple fact that with 30 on the RSI effectively rejecting the price action, that's causing a support, well, okay, inverse more so. It's more so a resistance, right? But it's supporting the fact that the price cannot increase past 37,000. That being said, not a great sign here, really. I mean, what that ultimately tells us is that we have this type of pattern here, and until we can break above that, we're not going to be in good shape. Okay, so I would say we'll probably see another week's worth of bearish divergence or resistance there at 37,000, and the likelihood of breaking, I think, is lower than it is to continue upwards at this point. Once again, we're creating this shelf, this resistance level at 37,000. The RSI is confirming that at 30. It kind of tells us that we are going to have trouble breaking that plane, and we might need to try to test it one more time or a few more times before we get there. And what I mean by that is just for the price to probably come down, trend closer to 30, and then come up and ramp up and hit it right here at this inception point, somewhere in the first week of February, I would say is probably more realistic at this point. But again, I would say generally speaking, 1 to 2 weeks before you get any type of confirmation, we're back up above a key level resistance, specifically 40,000 and or breaking free from this descending wedge pattern. Okay. Now, 4-hour chart, let's go and identify that here. We're up over 40. Correction, we're closer to 50 on the RSI, but we're getting rejected as well. So that kind of reiterates the fact that we have a major resistance. Now, we can argue, though, that we do have higher highs and higher lows in the 4-hour chart, which is true. Okay. So, you could see people drawing lines out like this, for example, kind of telling us that, yes, we are ascending, so to speak, this wedge type of pattern. Or sorry, not a wedge, but it's an ascending channel, right? And oftentimes these do continue to the upside. Okay, so tentatively, you could say that the midterm we could see that shift in momentum, but we did have a significant correction yesterday, and we're getting still rejected by the 50-day SMA as well, and those are all, I would say, adverse signs. So again, regardless of the fact that we have a nice channel moving upwards, I still think we have a lot of other indicators telling us that the price is probably still going to be held down. And the fact that we're having, basically a recent doji candle here, and of course the hammer down, there's a lot of reasons why the price could and most likely should make lower highs and lower lows moving forward. I do think we're going to be on a slight downtrend for the immediate near future. I'm excited to see what happens this weekend. I speculate we might see a dump this weekend, but it really just depends on, how the market rallies today or tomorrow. Okay. Now, we've seen notoriously the same type of behavior, and for the most part, the market will go red near the end of the day. We have seen that happen a lot in the last couple of weeks. So just be mindful of that. Tomorrow, Friday, close of business, there's a great chance we might see a correction or a significant push to the downside. And if so, that momentum would continue throughout the weekend. Right? Because even though weekends are notoriously green, I think with everything going on right now, the fact that we didn't get much confidence from that meeting yesterday, and ultimately a state of indecision, so to speak, we still don't have any true, game plan in place. That's going to continue to maintain the fear, uncertainty, and doubt. And I think that'll just kind of continue to slowly bleed for a little while longer until it dissipates. Okay. Again, just a handful of other little things that might factor in. But generally speaking, the TA doesn't look great on the midterm. Yes, we're making higher highs and higher lows if you spread it out. But on the same accord, we're also making lower highs and lower lows too if you look at the immediate, last 24 hours. Again, it depends on how you want to look at it. I prefer to look at larger time frames, which is why I think the 1-day candlesticks are pretty much telling us the most. And they're still telling us that we're getting held out at a strong resistance level at 37,000. That's the bottom line. That's just kind of where it's averaging out for the moment. And I would trust that more so than even the midterm here. And speaking of midterm too as well, we can see kind of a potential for a bearish divergence as well. The MACD could essentially shift to a downward fashion, which is notoriously a sign to short a position or to take a position to the downside based on the overall trend, plus the fact the fact of the matter is that the MACD is telling us that we're losing bullish momentum. I don't know. Looking at that, concurrent with the overall price action, getting held down below certain moving averages and getting held down below a resistance level, I don't see any reason why the price wouldn't continue to progress downward from here. Now, I'm not talking 29,000. I'm not quite that bearish on Bitcoin for the moment. Obviously, we lose 29,000, it's a different story. But 33,000 is the most immediate support level, and I do think we're going to hold fairly well there. We have a decent amount of volume accumulation at that point from previous price points, and ultimately, I think we're in decent shape if we're to see that happen. In other words, I do expect the price to kind of continue to digress over the next couple of weeks just overall, and to likely bounce off of 33,000. We might see a candle wick below that, but I think 33 will still hold, and I think that should be a good point where we should try to plan an attack, so to speak, right? We want to try to consider taking entry around that point. At least that'd be my consideration. I'm mostly liquid at this point. I'm ready to go for a decrease to that point. If it doesn't come down, heaven forbid, that's okay. We'll deal with that, right? But we don't have any confirmation above key level resistances yet, and we don't have that true notification understanding that we're moving in the right direction, okay? Again, the trend is your friend, and right now, we can obviously see the trend for the last 2.5, almost 3 months has been just straight down. Until we can break that trend, we have no reason to want to consider taking entry to the long side, the upside, of course, unless you are a gambling type. I don't like to gamble with my money. I don't know about you, but it just doesn't make a lot of sense. So why don't we wait for confirmation? Heaven forbid you don't buy the bottom. It's hard to find the bottom anyways. Why not jump in when the bulls are in control? The bulls have no control right now because they keep getting stopped out. They've tried, they keep getting stopped out. So needless to say, we're not in great shape there. Let's go ahead and look at one last thing. Of course, just for our due diligence, look at the Ichimoku cloud on the 1 hour. We can see that we're seeing, okay, we're within the cloud, which isn't terrible, right? This could potentially work as a support level, this lower lead. If that doesn't work as a support level, we break that support, then we are officially in a potential situation where we don't want to take a short position or a long position. And I say we don't want to take a short position because a lagging span is soon intersect with some price action as well. Unless the price drops down right now, then we won't see that happen. So for lack of better terms, we're kind of at this point where the Ichimoku cloud is saying, hey, there's definitely no long signals at all, right? That is not even on the plate. But there's only 1 out of 3 indicators telling us that we want to take a short position too, right? So we want to kind of try to respect the fact that we don't really have a significant state of decision at this point. It's kind of waffling up and down, and that's completely normal during periods of consolidation, especially when we're consolidating at a resistance. And that could lead you to believe that we are going to break that resistance because we're consolidating closer to it. But you could also argue the fact that we're in an overall bearish market. There's a lot of fear, uncertainty, and doubt, a lot of moving averages holding the price action down. The likelihood of it breaking through all that is fairly low unless we have a strong fundamental catalyst. So unless there's some really amazing news that comes out, we shouldn't expect the price to break this plane. That's kind of my thoughts here. So generally speaking, the 1 hour is not great. It's kind of just giving us a state of indecision, for lack of better terms. So that basically tells us we can't use it as an appropriate indicator. We could also take a look here at this as well. We could see that we just hit a 9 on TD sequential. So the likelihood of us having 6 to 10 hours more of continuation of the downside is fairly high. All right, so if we kind of take a big picture look at it, and this is why I like to emphasize the fact that you look at different time frames and extract different information. Specifically through my Trading Academy, I clarify that, but what I'm getting at here is that if we look at the 1-day chart, we can see that the price action is not ideal, right? We're still bearish divergence. We're getting held down by resistance. The midterm, the 4 hours, telling us we don't have a lot of confirmation. We have lower highs and lower lows in the last 24 hours, but technically higher highs and higher lows in the last 3 to 4 days. So it's kind of conflicting information, but we're still stuck under the 50-day SMA. That doesn't work well. I don't like that at all. And then we go down here to the 1 hour, we can see we're recently hit a state of exhaustion, we're on a downtrend, and if this downtrend continues lower than this previous low, then we're going to be effectively making lower lows and lower highs, at least, confirmation, so to speak, that we're having that, we've broken that trend of consolidation and we're on the downside, and then we're equally going to get that negative adverse, confirmation, so to speak. So again, you add all that together, it's more negative than positive, and it really just helps us understand, or implies rather, that we should expect to see the price action continue to digress lower. I don't think we should expect the bottom to drop out per se, but I do think that we're going to have a pretty definitive understanding of where the market's going within the next 48 hours, specifically leading into the weekend. So, of course, as per usual, I know I say this a lot, wait for the 1-day candlestick to close. If we cannot close above 37,000, we are still stuck in this resistance channel, and there's essentially no reason to get excited about taking a position alongside, right? So again, just throwing the information out there, telling you how it is. It's neither good nor bad. It's just kind of, again, it is what it is. But generally speaking, we don't have the best confirmation, so to speak. We don't have any confirmation that we're going to see a break to the upside. Had we broken above 37.5 or held above that price point, I think it would be a different story. But right now, it looks like we're seeing that shift in momentum, and we could see a downtrend from here. So we'll look forward to see what happens soon. So again, be cautious, be careful. Try not to consider taking a ton of entries. If you are invested in some altcoins, which most of us are, just dollar cost average and use a very small amount of your portfolio if you're going to invest. Right now, I would recommend just holding off altogether. I'm not telling you to sell your positions per se, but it does look like we might get a slow bleed over the next couple of days. All right, well, that's my 2 cents. I hope you learned a thing or two here today, and I hope you have a good rest of your day. I really do appreciate you joining me here. Looking forward to getting to know you better. If you decide you want to become a community member, I do recommend the first of the month, just based on the fact that, new billing cycle, we're going to have the website likely up and running by that point. I'm just waiting for my web developers to get things kind of ironed out here for us. So I greatly appreciate your patience. Hope you have a good one. We'll see you in the next one. Take care.